Woo, man, the markets have been crazy lately. We have a lot to talk about. Come in and say hi real fast. This is Phil. You're going to see more of him in a minute. So the long and short of it is, let's get after it. I do this part, and my logo comes up. And then, hey, we're back. So first thing we're going to look at is the monthly chart. Now listen, the month's not over yet. We got several more days before the month closes out, but I think it's worth us looking at. Let's take a look at it. This is the monthly chart on the spiders, SPY. We had this big rally to the upside. We had this big pullback. We're at a support line. We rally higher, but here's the deal. I want you to look at this. We went higher, 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 higher. A great start of 2023 going to the north, but for the first time so far, we have a lower high and a lower low. That's called a pivot candle. After a big run, you have to have a pivot candle with a lower high and a lower low before you can get a down leg. It's impossible not to get a down leg without a pivot candle first. You won't find pivot candle anywhere else in textbooks. This is something that we teach in the mentorship. But there it is. That's the pivot candle. We have one now. That is big time danger zone. Look at the MACD. The MACD has gone up, up, up. Now is getting ready to cross over. If it does cross over, that means we're going to see multiple months to the downside. That means we will have a lower swing high if and when that happens. So keep a close eye on that. Let's take a look at the NASDAQ. NASDAQ is almost making a double top. Do you see this? Again, this is the monthly chart. Every bar is 1 month. For 2023, you're going straight up. But then all of a sudden, if we blow this up, pivot candle, we have a lower high, lower low. It has to happen before you get a down leg. So that's what we're dealing with. Like for here, we didn't get a pivot candle. We have a higher high, even if it's a red candlestick, a higher high, but a lower low. And then we have a higher low, but a lower high. In other words, we never got a pivot candle and it rallied straight higher. So keep that in mind. If I look at Russell's 2000, this one is relatively weaker than what we were looking at. Look at the high versus where we're at now. We are relatively down further than what we were seeing, say, on the S&P or the NASDAQ. If we go to the NASDAQ, we were almost hit that high. Do you guys see that? We go to the Russell's 2000 monthly chart. We're nowhere near that high. And this is the Russell's 2000. Now, you'll notice I drew two red lines. Down, 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 a waving flag. This is a bear flag waving at the bottom part of this pull. So if you don't know what a bear flag is, go to freeonlinetradingeducation.com, freeonlinetradingeducation.com, and look for bear flag in the chart school. And so that is ominous. If it were to break down, it's got to break a lot of trend lines, a lot of moving averages. And if that happens, we go lower than this month or next, more likely next if it happens, that's going to be trouble. The financials, same thing, but we have a big symmetrical triangle. We hit resistance and we have dropped from that. We're in the apex of a symmetrical triangle on the XLF, which is a huge ETF on banks. And the question is this going to break out to the upside or break down to the downside? At this moment, the financials or the monthly charts on the financials and everything else is pointing to the south at this moment. Doesn't mean it's going to drop. It's just saying that that's the direction it's pointing at this moment. Very important for us to watch this. US dollar monthly chart had a huge rally, but we smacked our head at a trend line. We're right there at it. Had a technical glitch there. I'm back. Monthly chart looking at gold, and you'll see a nice bull pullback. This thing could be ready to rock and roll to the upside. If I go to silver monthly chart, it's trying to stay above these moving averages at a major area of resistance. If it breaks out, that could get really bullish too. The VIX on Friday, guys, dropped 9%. There's no fear out there in the markets. But for the month, you can see we bounced and heading higher, but we came back down to this line. Do you see this line of what was support? Now it's acting as resistance. So again, the month isn't over yet. These are dynamically moving bars that we're looking at right now. They are not static yet. Okay, now, more importantly, the week has closed. So let's take a look at the week. If I go to the week, this chart that we look at on the weekly is the S&P 500. The question is, does this look more bullish or bearish? At this moment, we have what's called a bullish harami. Bullish harami on the weekly chart. It's a bull pullback to the rising 20-week moving average, and it could go higher. We have an inside trading candlestick, a lower high, higher low. Here's the deal, though. Guys, this is a Fibonacci. Do you see these horizontal lines coming down? it went below the 23.6. It did not even get to the 38.2, which would be a logical area with the rising 20-day week moving average, or the 50% down here, which would give us to the trend line. This would be a logical area to go on a weekly. So several more weeks to the downside. However, this is a bull pullback with a reversal candlestick pattern that could bounce higher. Next week, if we make a higher higher this next week, we could get our pivot candle, and that could be another leg to the upside. So something to be watching for. If I go to the NASDAQ, the Qs, same thing. Down, 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 bullish harami. But the problem is we made a higher high and a higher low. That's our pivot candle, so it's not that much of a problem. The big problem is most of that candlestick is made up of an upper shadow. In other words, the bulls had their heads handed to them all the way down, 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 down. Again, this is the weekly. These are static candlesticks. They are unmoving. That's where they're at. And we're below the 23.6. We didn't get down to a logical area of a rising MA, even though it's kind of near there. But a 36.2 or a 50%, 61.8 Fibonacci levels. If I go to the Russell's 2000 IWM, up, a pullback to the logical area, 50% Fibonacci retracement. Really good, and a spinning top reversal pattern. So that is, and a rising 20-day. This would be a logical area to see a bounce commence. So will we see that? We need to see that for the markets to go bullish. If I go look at the financials for any help here, last week was very, very bearish. Here's the big problem with this. We have a symmetrical triangle. We hit the support line of the symmetrical triangle. We get up and blast through the symmetrical triangle. That should be a symmetrical triangle breakout to the upside. We now have closed back inside. Remember what I said about that? Anytime you break out, it's a fake breakout, it comes back down, death hook. This is a bearish death hook on the financials, on the weekly charts. Guys, this could get bloody and fast. In other words, see a huge sell-off the next few weeks to the downside. That is something we have to watch for. We have to see a bounce next week. We have to have a higher high on the weekly charts. We have to heal themselves. We're in big time danger zone. And before I get into the daily charts, I need to say, Phil, the guy that you just met momentarily, he's a big time AI guy, and we're going to be getting geeky. We have an interview at the end. And for any of you geeks that have nothing better to do, we're going to be talking shop at the end, and we'll fill your head with a ton of information that might be useless, or it might be at least entertaining, right? So anyway, next, if I look at the weekly chart on the U.S. dollar, which has been on fire, guys, we broke a major area of resistance this week. Huge break to the upside. U.S. dollar is putting strain on commodities. However, speaking of commodities for the week, if you go here, we actually went higher. So you have commodities and the US dollar both going higher, which does not happen very often. This is a bull flag. We didn't even hit support. Do you see this? We didn't even hit support, and we started to bounce. That bounce is a pivot candle. This could explode to the upside. So gold, potential buy, silver, a potential buy. This was a symmetrical triangle. It broke down, but immediately healed itself. This is a bullish death hook to the upside. This thing could get really bullish and fast. Watch out for gold and silver on the weekly charts. If you go to the VIX weekly chart, we go up and then down, up and we're down. We're all over the place as far as VIX is concerned. All right, moving on. We're going to go to the daily charts. Quick look at the dailies. And I might even show a couple tech stocks because you guys love the tech stock stuff. We'll do that right before the interview. But if you look here, this is the spider. What was interesting on Friday, price action, is it was breaking down under a huge support line, guys. We were going to break down and just crash and burn. But in the afternoon session on Friday, the markets came screaming back, healing itself, because it was not going to close underneath this trend line. If I look at the NASDAQ, same thing, went down, got below a major trend line and healed itself. And we have hammer down at the bottom. That's saying, hey, it's wanting to go higher. Russell's 2000, down, 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 and rallied higher. This was the 20-day moving average, not the 20-day. That's the moving average on the thing. It went down below, if you look at this, the 200-day moving average. We went below the 200-day moving average on the Russell 2000. And by day's end, it healed itself, giving us a doji above a major trend line. Very powerful to see. Financials is last week went up and then came back down. This week we went down, down, down and came right back up at the 61.8. This is a key area. It needs to bounce here. Financials need XLF ETF needs to go higher. It has to bounce here. And if it does not, the market's going to continue to drift south. When it broke that symmetrical triangle, down, 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 down on the weekly, that was bad news. US dollar daily is just up, up, up. But guys, this is a big time bearish divergence. If you look here, we're diverging on the MACD. This is short-lived. Look for the US dollar to give back. We are just way overextended on RSI. Everything's extended on that. If the US dollar does a significant pullback, that should help out stocks and the commodities such as gold. Look at gold. Wednesday we had a big pop to the upside and we stayed up there. Huge pop on Wednesday. Same thing in silver, big pop on Wednesday. And this is great. This could be a bullish death hook on the symmetrical triangle. Symmetrical triangle, we broke down. It comes back up, heals itself. If this thing could power straight up, that'd be interesting to see. VIX on the daily chart, just heading right back down. Thursday was very, very bad. Today, very, very good. As far as bulls are concerned. So that's the long and short of it. I'm going to do a quick look here, guys, on some key tech stocks, and then we're going to get into a fun little interview. So let's go to tech stocks, Grok tech stocks. Apple was up over 1% on Friday. You'll see that we were down, 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 down. This was the gap down run up. Remember the white tail I was telling you guys about? There's the white tail run to the upside. This is a little bull pullback. This is trying to put in a bottom. The problem is the MACD is below the zero line. That's not great. We want to see it above that, so we need to see more upside there. AMD on Thursday had a monster sell-off. Look at this huge bar. We had two bars here, big bar there, big bar there. That's institutional type selling here is what you're seeing for AMD. AMD, we came up, we hit our, look how the market maker opened it right there at a key area. Key area. And then so we're trying to find some support here. I just would not be holding AMD. This is for educational purposes only. This is not a time to be buying or selling any security based off of anything that I say. Okay, are we all in agreement? Amazon, if you look here, big gap up on earnings, a nice bull pullback. It found support at this trend line, then Thursday it broke it. It's just in a lot of trouble right now. That's not great. If I look down of others, if I want to see, Netflix was up over 2% on Friday. Thursday was hard, but it's just going sideways, just nothing too exciting there. But NVIDIA was down 2%. But it had earnings and it beat earnings, but people were selling into that strength, just not great. Oracle was up. A lot of people, Friday was pretty good. Tesla was up. Snap was down after having a 5% run yesterday to the upside, which did really well. Which we know, no, you were in Shop, right? Shopify. Yeah, Shopify was up fractionally. But if you look at Tesla, big pop up, high base above these moving averages that could get bullish and go higher. Quick look at Shopify just because it fills in. Down here, we had there's the gap down run up. See this? This is the white tail, and we rallied back higher over a very important trend line, and we're finding support here at these moving averages, so it looks good. So anyway, hey, let's do a quick interview. Let's do it. Phil, how does that sound?
Sounds like fun.
Let's do it. Catch you later. See you soon. Phil, man, you're here in the business of Grok Trade. And so first, introduce yourself and why are you here?
Oh my gosh, it's crazy to be here. It's unbelievable. Well, gosh, can I start off with, I met you something like 20 years ago, and we didn't meet in person. We met with one of your first companies, freetradingvideos.com, and I just want to sincerely thank you for everything that you provided back then and keeping your energy level up, and just you have changed the trajectory of my life. So I really want to thank you for that.
Thank you. That is not lost on me. I thank you a million times over for saying that. We do go back a long time.
Yeah. Gosh, in the past, I've seen you in New Orleans doing conferences. We've done an interview prior. We continued to communicate on a regular basis. It's just it's wonderful to be here at GrokGrad offices and get a chance to meet you and do another interview with you. I thank you.
So
Appreciate it.
who are you? Introduce yourself.
Oh, right. I'm so sorry. I am a small business owner. I started a company just about the same time I met Grok. That was my second company, and we do website development applications. So we create very large scale applications and very public facing applications. Some of the ones that I really like to brag about are ESPN.com. That was a huge one. I'd love to brag about my USA.gov work and my GSA.gov work. Huge websites. The list is, I'm very flattered to be in a position to continue to win work and build a team and all of this, learn advanced technologies and try to, attempt some new things now.
Yeah. And clue us in on why you flew in from DC to here in Tampa.
Oh my. The special interest in artificial intelligence, the marketing that it gets, the advanced technology behind it, and then how I studied artificial intelligence in college, and I could never really put it down, so I continued to study as I continued my career. And I would love to be able to match that with algorithmic trading.
So what's interesting is a lot of you guys know that I'm a fund manager and I own a hedge fund, and we are a quant fund. And in that we use automated trading. And so we use AI, or a subset of AI. We use ML, which is machine learning, and which is also considered in the realm of FinTech, financial technology. And Phil and I been in, we're friends and been in contact, and he works on large companies like USPS, Postal Service. I mean, he does big time work for big time people, but has an affinity to want to get into FinTech because he's got a lot of work. He's got workhorses, he's got thoroughbreds, and he's got quite the operation, and everything is drifting towards artificial intelligence. And if you can do that in finance. So speaking of that, let's go back a step. Sure. Tell us about you, because Phil is a GrokGrad. He came through nearly 2 decades ago. Give us a snapshot of you from when you went through your training to where you're at now, just in the trading world.
Oh my gosh, that it was revolutionary. I remember I began with you guys in college, actually, and that's the same time I was starting to build my second business. Then, very immature, adolescent, but kind of learning my ways and making a lot of mistakes, probably at the right time in my life, right? But I had started this company and was making money off of it, and I was trying to figure out, how do I make my money work better for me? How do I work into that? That's where I found free trading videos and GrokGrad, and I remember trading the $10,000 and then getting to that $25,000 where you can actually do day trading and things of that sort, right? And then I remember getting feedback, oh, you need to have 100,000 before you can even do anything more. And basically, my introduction to you spurred me to I think it was 2007, 2008, when everybody was losing money, and nobody could understand why everybody was losing money. That was some of my immaturity there. I ended up spending my money on buying every single book possible, probably 200 books or 250 books. I'm not even joking around. Staying up late at night reading them, And what ended up happening was I relied on trend trading, which is what your system provides, and then using some of the very simplistic tools and very simplistic views in order to, that's where I saw my profits start to grow. So, learn everything, definitely. But I can tell you that Des and Grok Trade, this is not an advertisement for Des or Grok Trade. This is an honest opinion. His system works, and it's been very powerful to me. Since then, I like to keep trading very simple, and follow a common routine and trend throughout it.
Nice. That's so cool to hear. So now let's jump into AI, because that's the hot topic, and you're in it in a big, meaningful way. You've got a blog that's going to be coming out at some point that you wrote on. Can you give us a quick synopsis on what that's about?
Oh my, yeah. Let me try to be quick about it. So artificial intelligence is this very heavily marketed tool that people believe is already created. Now, artificial intelligence has a lot of avenues to it. So there's complex algorithms, there's machine learning, and then there's deep learning, and then there's actual artificial intelligence. So what we're trying to do, and what I'm trying to help redefine what artificial intelligence is the practicality of how you can implement AI tools. Now, it's going to be marketed no matter what, and there's just no way around that. But let's be smart around the way that we implement it, and let's not get sold by the marketers. Let's actually do positive work inside of artificial intelligence, which includes that complex algorithms, data-driven sets, machine learning, deep learning, and then the neural nets and the complexities there.
Yeah. So one of the things that I love is, just I'm blessed by the fact that I was in California at a fine dining restaurant on our 25th wedding anniversary, and
congratulations, by the way.
Thank you. Thank you. Lo and behold, I'm sitting next to a big time developer for Google, and he is a DeepMind. So DeepMind was acquired by Google, and big developer there, one of the biggest developers for the Google Voice, which uses AI. And his wife is a full-time trader of 4 years. We get talking, but he doesn't know anything about trading, but is fascinated by FinTech and the opportunities that are there, and the sword that he wields with being very deep in the artificial intelligence world. He specializes in neural networking, neural net.
Yeah,
that's his specialty, and he is coming in at the same time. You're like, man, I'd like my team to be, we'd like to start drifting towards FinTech. And it's just like it's all coming together right now in this very serendipitous way, So, and that's why you are here. And what's interesting is it's like, how can we take our current algorithms and enhance them, make them more powerful, or looking for other algorithms that can beat the ones that I have now, so that we have a lot of opportunity there, and it's very exciting. And I see the lights went off behind you.
I know, I saw that. The building must be shutting down now.
It's shutting down. They're on timers, so
they got excited about AI.
Yeah, right. We'll show you AI, and we'll shut off the lights for you. We'll turn them back on for you. Well, So that's us. We have a full weekend. The hat you're wearing is a Ravens hat.
That's right. I have to wear this one today
because tomorrow we have a preseason game with the Bucks and the Ravens that you and I are going to. Thank you for the ticket.
No problem.
Blessed me with tickets. Thank you, my friend. Yeah, and so we'll be going to the game tomorrow, and all day tomorrow we're talking about AI stuff.
Yeah, you bet. I'm getting you back for the NOLA tickets that you got me, the New Orleans ones. Yeah, you did.
I love it.
So it
Yeah,
all
fun
full
times.
circle, full
It
circle.
does, yes. In fact, good memory, by the way. You have impeccable memory. I played too many
Appreciate it.
combat sports, right? So football player, rugby player, a lot of concussions.
Oh no.
No, it's all good. So anyway, my hope, if you could share, let me just go back, because the people watching this interview right now
Mhm.
are people they geek out on trading. They
Yeah.
geek out, and some of them are just getting started. They've only been in it a few years now, and they have a plethora of information on the interweb that they can get information from. Just from your point of view, what type of encouragement could you be, and what would you share with developing traders today?
For developing traders, one thing that I would say is that uh, don't let the market beat you. Be smart with the way that you interact with the market. Have your set list of rules, and when you make a mistake, make sure that you only make that mistake one time. So when you make a mistake, write that down as a rule, and then as you move forward, you make sure that you don't make that same mistake. A lot of those come into play with entry and exit points. Always having stop limits set when you're trading, and just being very diligent, doing your intelligence first. When you act on emotion, you're going to make the most mistakes ever. And this kind of dips into what algo is really getting into, is we're removing emotion from the situation.
Mm-hmm.
That's just a blanket, kind of, just don't make the same mistake twice. Learn from your mistakes and write them down, log them.
That's good. Well, Phil, it's a sincere pleasure to have you in the offices. And I love that we're back together working on more advanced things, taking our trading to a whole new level with automation and letting the machine do the heavy work for us. So yeah, fun times ahead, my friend.
We're gonna have some fun conversations over the weekend, and we're gonna get pretty in depth. I'm sure of it.
Yes.
And we might not even watch the football game tomorrow. We might just talk about the trading.
Yeah. All right. Well, take care, everybody. Till next time, maybe we'll do some more of these interviews. If you like them, let us know in the comments. Take care. We'll see you. Bye.
Cheers. Bye.
Guys, why are you still here? You're supposed to be gone while I still have you. If you haven't joined the 301 mentorship yet, seriously give that some serious thought. Mark the Meerkat's been trading a long time in the markets. As you know, I have too. We take people under our wing and we teach you what we do to trade in the live markets. We trade a significant amount of money on a day-to-day basis in the live markets ourselves. If you're going to learn from anybody, learn from us. It's the 301 mentorship program. We've been doing this a long time, and we're happy to help you. There you have it. Now, get out of here.